Hello and welcome to Global Business Insights, where we take a deeper look at the headlines from a business perspective. In Japan, July consumer price index excluding fresh food climbed 2.7% from a year earlier, accelerating from 2.6% in June. That's in line with consensus estimates. That's core CPI. Stickiness in the core inflation gauge points to the likelihood that the Bank of Japan will continue to consider further interest rate increases. Also this morning, Singapore's July inflation came in 2.5% up in July from a year earlier. Also the smallest increase since February 2022. US market indices pulled back yesterday, led by the tech-heavy Nasdaq, as investors braced for a speech by Federal Reserve Chair Jerome Powell at the central bank's annual Jackson Hole symposium today. All eyes on Powell's speech. New data is fueling concerns of a weaker labor market, but we'll see how that plays out. We'll show you some of that speech later in the day and the main takeaways. Sales of homes in the US was up 1.3% in July compared to the previous month, marking a modest recovery after 4 consecutive months of decline. Sales are still lower by 2.5% compared to the previous year, as high borrowing costs make home ownership less affordable. US manufacturing PMIs fell deeper into contraction to 48.0 in August, below the forecast steady print of 49.6. But services PMI unexpectedly inched upwards to 55.2 from 55.0, better than 48.0 expected. Also, data on US citizens applying for unemployment benefits rose by 232,000 in the week ending August 17, also above expectations and the previous week's gain of 228,000. The HCOB Eurozone manufacturing PMI dropped to 45.6 August 2024. That's the lowest in 8 months, below expectations of 45.8. And on crude oil, Swiss bank UBS has issued a note saying that a recovery to $90 per barrel for Brent was on the horizon if OPEC remains cautious into its next meeting in September, and if the Chinese economy gradually recovers. Also, U.S. Energy Information Administration revealed a drawdown of 4.649 million barrels, higher than the expected 2.8 million barrels drawdown, also pushing prices slightly up. Last week's number was a build on inventory of 1.357 million barrels. AstraZeneca says it will relocate its vaccine manufacturing site from Merseyside to Philadelphia, following a deadlock in negotiations with the UK Labour government over plans to cut state aid promised to the project. Chancellor Rachel Reeves is thinking of reducing the amount of aid pledged by the last Conservative administration of about £90 million to a lower £40 million. UK oil and gas firms say government plans to hike windfall taxes and eliminate investment incentives, threatening 200 billion pounds of investment. We will look closer at what that could mean. Apple is yielding to pressure from European regulators to comply with EU law by allowing iPhone users to delete its own apps such as the Safari browser and the App Store. Regulators have said Apple makes it more difficult for users to access third-party alternatives to its own payment tools. And in Botswana, Canadian mining company Lucara diamond miners have unearthed the world's second largest diamond. The 2,492 carat stone could be worth upwards of $40 million and is the biggest known gem quality find after the Cullinan diamond discovered more than a century ago, which was cut up and incorporated into the British crown jewels. Lucara's share price jumped by about 40% on Thursday. We also expect to get Nigeria Q2 2024 capital importation report later today. If we get that report, we'll bring it to you. Details of what it's unveiling in the evening episode. Welcome back. In the UK, oil and gas firms are expressing grave concerns about government plans to hike windfall taxes and eliminate investment incentives to an industry that supports 200,000 jobs. 42 companies in an open letter are reported to be warning that official plans threaten £200 billion of investment in all forms of domestic energy, including renewables. The new government, in need of fiscal space to pursue its priorities, currently wants to increase windfall taxes on oil and gas profits from 75% to 78%, and extend the tax until 2030 and abolish some of the tax incentives for further investment. The letter also suggests that a hostile tax environment would threaten not only the oil and gas industry but investment in renewable energies using cash generated through fossil fuels as exploration and production slows. Other critics have said the windfall tax was a response to excessive profits due to higher oil prices after Russia invaded Ukraine. Now that the price is lower and we are less likely to get windfalls, it only serves to disincentivize investment and punish the more efficient companies with higher tax rates. There is a trend of expanding fiscal government pressures post-COVID in many countries, especially with leadership transitions, as we have seen in the UK. Taxes are trending up. New windfall taxes will weigh further on profitability and growth. We just heard AstraZeneca is threatening to relocate its vaccine manufacturing to the US, but corporate taxes in the US may also go up depending on how the elections go. Taxation on unrealized capital gains have also been discussed in the US as more ways of getting those who can afford to pay more to do so. In October, Reeves is expected to announce more tax hikes, possibly even for banks. Labour has also said there will be no tax rises for working people. The implication of this is we could see more corporate relocations, which of course come at a cost. High taxes will also weigh on profitability and economic growth, which worsens an uncertain economic growth scenario, and which of course more forecasters have already flagged as tepid. It could be an advantage for lower cost emerging environments with strong infrastructure to attract investment as corporates look beyond developed economies, so countries like Vietnam, India, Malaysia, Egypt, South Africa and others, as they step up efforts to attract businesses seeking to relocate. Another reaction from business may be another wave of cost cutting and pressures to use more technology and embrace new digitization opportunities to boost productivity and get better margins, which may compensate to some extent for higher taxes. The tone is expected to be dovish when at 10 a.m. Eastern Time, that's about 3 p.m. UK time, we hear from Powell. Also, as investors now see a decreased chance of a large half-point cut in September, but not expecting any surprise that could impact this 75% chance of a quarter-point cut next month. Andrew Bailey, that's head of the Bank of England, will also give his first remarks since the 1st of August, when the UK Central Bank cuts its benchmark lending rate for the first time since the start of the pandemic. The panel discussion tomorrow focuses on reassessing effectiveness and transmission of monetary policy, highlighting views from central bankers from across the globe. Minutes from July's FOMC, that's the Federal Open Market Committee's session, the Monetary Policy Committee of the Federal Reserve, already showed a vast majority of members in favor of a September cut, barring any surprises. If there were any doubts about the Fed's intentions to enact at least a quarter percentage point cut at the September 17th to 18th Open Market Committee meeting, they were put to rest in the minutes, many think. Recently, Philadelphia Federal Reserve Bank President Patrick Harker also said yesterday that the labor market is cooling, though he thinks easing should be slow and methodical. The main question now is about whether it's going to be a quarter or a half-point cut in September. Powell is unlikely to signal anything unusually aggressive, as we still need to get some more data releases ahead of the next meeting, and will most likely re-emphasize the familiar themes of data dependence, independence of the Fed, and the balancing act involved in not moving too quickly and too much. Kamala Harris has said little on economic plans yesterday as she accepted the presidential nomination of her party. She spoke of tax cuts for middle-class Americans, also pledging to tackle fiscal excess. No surprises are expected at Jackson Hole, and in the evening episode, like I said earlier, we'll bring you the takeaways from Powell's speech. Asia Pacific markets were mostly lower ahead of U.S. Federal Reserve Chairman Jerome Powell's comments at Jackson Hole. In Japan, core inflation, which strips out prices of fresh food, came in at 2.7%, higher than June's 2.6%. That's core CPI in Japan. And the yen led gains among a group of 10 currencies as the central bank indicated that it may likely continue to raise interest rates, adding that policy normalization will not only proceed but still has ways to go. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.